is worse than what we saw in February and March of that year amid the pandemic. How much does this factor very directly into the path of the Fed and, frankly, where Treasury yields will be? Because this is the determinant between a global acceleration or a soft landing and something that looks a lot worse.
Absolutely. I think there is a growth headwind coming from China. I would also argue from Europe, because Europe is facing an energy crisis, a cost of living issue. But ultimately, the U.S. is a bit of a closed economy, and our labor market is extremely strong. And I think that's what the Fed is focused on. They talk about the supply-demand mismatch in the labor market. So I think they'll keep it at the back of their mind, especially once we get to neutral. I think that discussion becomes a lot more important. You talk about treasuries. I would say a lot of treasury people thought that it was no longer a safe haven because there was no place to hide in the first quarter. You know, risk assets were underperforming. Global growth may have been slowing, but we didn't see the demand for treasuries. I think that's coming back, and people who've stayed away from treasuries will say, well, we've priced in a lot in terms of hikes. If global growth is slowing, I think the long end of the treasury market starts to become that safe haven. The front end may still be more linked to Fed hikes, but that long end will see demand, I think, if global growth continues to struggle.
Priya, thank you so much. Greatly appreciate it. Priya Misra, TD Securities. Of course, Lisa and I, with John, deep into planning for January in Davos. And, well, we got to go to Dick's Sporting Goods and support them because they're in retail sales at Dick's Sporting Goods. I was going to come back, wait to see if we're going to Davos in January. And I was looking at the Rossignol on-piste ski boots. They're up to like $600. They go halfway up my knee here.
Tom is trying to dress me. He's already telling me that I should wear a full ski gear of Patagonia and see how that works.
We got to go full ski if we come back in January, just to support Dick's Sporting Goods, missing it big as we saw with Target.
All right, aside from sartorial decisions, though, there is a real question about what the main theme will be come January. I mean, honestly, the meetings have moved from being sort of very definitive on ESG and trying to talk about lofty environmental goals to very practical, getting meetings on the ground to really understand what's going to happen. And there is no understanding right now. So what will it be come January when we actually have to come to conclusions?
After 08, 09, I would suggest what there'll be is just what we heard from Mr. Gitlin at Carrier, which is corporations are aggressively going to adapt and adjust to what they're given.
Will China be here, given the fact that there is so much focus on what happens there?
And again, that has to go with the lockdown. And again, January is post the Party Congress in the late fall. We look for surveillance to be in China for that Party Congress if COVID clears. Please stay with us. The meetings of the World Economic Forum coming up on technology. Chuck Robbins of Cisco.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Uvalde, Texas, authorities say a teenage gunman went from classroom to classroom at an elementary school, opening fire. At least 19 children were killed, along with 2 adults. A number of others were wounded. The gunman was shot and killed by law enforcement. President Biden demanded action to curb the violence. Gun control legislation is stalled on Capitol Hill. Ukraine's President Volodymyr Zelensky says there are no prospects for diplomacy unless Russia pulls troops back to their pre-invasion positions. He vowed that Ukraine will fight until Moscow returns all of its territories. Zelensky spoke by video link to a breakfast meeting in Davos. And Russia is one step closer to a default after the U.S. Treasury let a key sanctions waiver expire. American banks and individuals are now barred from accepting bond payments from Russia's government. That indicates the U.S. would rather force Russia into default than allow Moscow to spend its dollars to benefit American investors. And China's Premier Li Keqiang says the country is facing economic difficulties much worse than at the start of the pandemic in 2020. Li urged that efforts be taken to ensure reasonable growth in the second quarter. China is all but certain to miss its growth target by a large margin for the first time ever. Much of that is due to COVID-0, which has hammered the economy. And Americans are returning to summer travel, are being greeted by sky-high airfares. According to travel search engine Hopper, fares for domestic travel are up some 25% from those pre-COVID levels and are 50% higher than last year. Blame a combination of soaring jet fuel prices and a shortage of pilots, which has led to 12% fewer flights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
best of financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Of our gas used to come from Russia, but it was only 5% of our overall energy consumption. So we're very self-sufficient on this. We're not dependent on Russian energy, which makes, of course, our position quite comfortable.
It is also true that we have good fundamentals. Less than 8% of our gas imports come from Russia. Less than 5% of the oil imports comes from Russia.
Spain and Finland. Alexander Stubb, the former Prime Minister of Spain, and the present Prime Minister, Pedro Sanchez, two nations, I'd say, removed from this. Finland, excuse me, Finland, Spain. You know, I was always, were you a good player of Risk when you were a kid?
I never played Risk.
3-on-2 Central America?
I was a word game nerd. That was my thing,
always won Australia in Oceania or whatever they called it, and I got just wiped out across North America.
We can have a therapy session on that later. What is very clear from both of those interviews, frankly, was a differentiation from the situation that Germany is in with the incredible dependence on oil and gas. Exactly. It's a very sort of fragmented system, and how the fragmented system deals with it is very different nation to nation.
Will Kennedy with us now, executive editor, spearheading our global coverage on energy and commodities. Will, what's the discussion in Germany after the embarrassment of Germans leaving Rosneft? This weekend we're going into, this June that we're going into, what's the debate among the powers that be in Germany?
I think it's similar to the debate that you're seeing across Europe, is that there's an acknowledgement that Europe needs to and has to wean itself off its dependence on Russian energy, and that dependence is writ large in Germany, but it's going to be very painful to do it, and it's very painful given the very high inflation rates we're seeing across the continent, make these choices very unpalatable for German politicians and European politicians. So there's a real almost panic about how to balance the need to get away from Russian gas without accelerating price rises further. In the UK this week, the regulator said that energy bills, which have already risen sharply this year, are going to rise another 42% in October. That's disastrous for most families.
This is exactly it, Will. And how much is that going to send a place like Germany into recession if they try to accelerate some sort of withdrawal from their reliance on oil and gas from Russia, which is the reason why it hasn't happened, even with all of the concerns around what's been going on in Ukraine. Well, how far are we into that process? How long, realistically, or how short could it take?
Well, the European Union has a plan to go a lot of the way this year. I think that Germany has said that gas will be oil they want to do quite quickly, perhaps by the end of the year. Gas will be a multi-year process, but it's really going to depend on their ability to source energy from elsewhere, which basically means buying gas from the rest of the world. Now, they've created the infrastructure to do that, bringing these floating LNG plants into Germany, so they're starting to work through the logistical issues, but of course it's going to have a huge impact on global gas markets. They're going to have to buy from elsewhere, and that's going to deny that gas to other countries, often emerging markets, which really need plentiful and cheap supplies of energy. And it's going to force the general level of energy prices throughout the global economy higher.
Well, how much does this set the conversation about sustainability back?
Well, I think that's a mixed picture. Obviously, you're going to have a lot of people say that we need to go a bit slower, that economic issues and energy security issues need to put the carbon question on the back burner. I'm sure you've heard that from people in Davos this week. But on the other hand, there is a sense in which it is an opportunity for renewable energy, that one of the ways that Europe can replace Russian gas, much of which is used to make electricity, after all, is by accelerating its already rapid installation of wind and solar, which after all are cheaper. So there is an opportunity there.
A Wednesday tradition, even in Davos, we ask the surveillance dumb question of the day. We do that with Will Kennedy. Will, you said UK utility expense goes up 42%. Are Americans going to see the same lift in their utility bills? And if not, why?
Well, I think American utility bills are going to rise. There are two reasons why it won't be as dramatic. Funnily enough, for one of the freest economies in the world, US utility bills are more regulated than they are. You know, they're fixed for longer periods than often they are in Europe. And natural gas prices have risen hard in the US. They're up above $8 a barrel. They may hit $9 at any moment, and that will slowly feed through the power sector. But those prices are still a long way off where they are in Europe. It's getting more expensive, but it's still relatively cheaper. But yes, it will have an impact. It won't be 42%, but it will be serious. Yeah.
What's your price on Brent you're focused on? I mean, mentally out there, what's your tip point on Brent going up that's the next important level?
Well, I think the oil market is certainly heating up right now, Tom. As you see from that chart there, oil prices are fairly steady, but there's a sense in which I think it could be a long, hot summer for the oil market. Clearly, we've got gasoline prices at a record in the US. We've got diesel prices near a record. We've got Memorial Day on Monday, the day at which the driving season, this period of peak demand starts. So we're going to see people driving. We're going to see people flying. Already, US oil refineries are working flat out, more than 95% capacity on the Gulf Coast.
Wow.
That all means demand for oil is rising, and what we're seeing in the physical market is people paying premiums to get their hands on barrels now. Now, we're not seeing that in the futures price, but that's telling you the market's getting tighter and prices will rise.
Will Kennedy, thank you so much. I hope you come out and visit along with Simon Kennedy here in Davos in the January meetings. Mr. Kennedy running all of our energy coverage. And I just think this is just fabulous that Simon and Will Kennedy decided to invest in Davos as they come every year. And the Simon and Will Kennedy, I think it's a sheep farm, maybe a goat farm, I can't tell. But it's good to see them. You know, I mean, this is something, they don't make any money on this, but they hide it in a Swiss bank account.
I guess so.
You know, so like,
they hide it in a Swiss mountaintop. I suppose that's the equivalent for a goat farm, even though
it's sort of like, I mean, Simon Kennedy looks like Cary Grant, so they can pull it off. It's like Cary Grant and Audrey Hepburn, and they're throwing the profits into a Swiss bank account that nobody knows about.
So you're talking about how in January, if we're here, we're going to be wearing lots more stuff, and you talked talked about Dick's Sporting Goods. I want to just revisit that for a second because
Please.
they came out with earnings expectations that came down dramatically. No, I was talking about Dick's Sporting Goods, the retailer that specifies in sports, and I was looking at the shares. They're down as much as 20% ahead of the open here in New York City. I think this is telling. It is yet another retailer coming out significantly downgrading their expectations over the next year after Snap yesterday had an absolutely horrendous day. You're seeing other retailers lose in sympathy that are comparable types of retailers. How much are we going to see this, Tom? Why are CEOs being so surprised by how much there has been a deterioration in the macroeconomic backdrop?
They may be surprised now, but then they have to act. And I think the confidence the neutrals or the optimists have is they believe corporations will adapt and adjust. So it's clearly a retail, a consumer challenge.
Yeah, but I do wonder, again, how much this really goes into what's going on in China, how much supply chains have been disrupted. Yes?
Can you take us out? Because I think I'm going to sneeze. It was the fondue last night.
I think it was the sheep back behind us. Coming up, we're going to have a fantastic conversation. Karen Carneal.
Guys, try it in Switzerland. Velveeta fondue.
At Bridgewater Associates.
They take the brick of Velveeta and they put it in and melt it down.
Tom. This is Bloomberg.
Velveeta fondue.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We're clearly in a bear market. The question is what's going to form the bottom.
You have extreme pessimism and oversold indicators. So what you get is a summertime bounce.
We're coming out of an environment where 2021 is probably going to prove to be a peak year in earnings.
The second round of tightening hasn't been priced in.
I think to say that at this point, global economy, that there is a recession, I think that's a bit premature.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Important conversations at a highly uncertain time from the World Economic Forum in Davos, Switzerland. For our audience worldwide, good morning. This is Bloomberg Surveillance, live on television, on radio. Tom Keene, Lisa Abramowitz, John Farrow off on assignment. We are here debating some of the top issues of the moment amid a pallor of incredible sadness, both with respect to what's going on in Ukraine and then in America with the shooting in a school that was one of the deadliest in American history.
And we need to frame the Bloomberg reporting now, because these are fast-moving stories, folks. The somberness across America is equaled by what I think has been underreported, Lisa. There's severe fighting in what I'm going to call far and southeastern Ukraine. It is beneath the headlines in America, but there's some real tension in Ukraine right now.
There's been a constant drumbeat of just terror and, frankly, incredible sadness to the news flow over the past few months and, frankly, years, and how much that's affecting the conversation here is tremendous. People are trying to look forward as to how to then pivot amid such uncertainty, especially with the backdrop of China coming out today talking about how the economic situation is worse than what they saw at the height of the pandemic.
Well, that's the economics of the moment, but with the president speaking from the East Room this afternoon, of course, Bloomberg will give you that coverage. I do want to point out our David Weston with Balance of Power at 12 noon will clearly address these topics. But to be perfectly blunt, frankly, whether it's China or it's this tragedy in America, it is a debate that hasn't changed one iota in years.
Which is a frustration. And frankly, I hear it underpinning all of the conversations that I have here at Davos. People are self-aware and saying, look, people come with lofty goals and then they check them a year later and they haven't changed. And there has been a much more practical tone to a number of conversations being had here where there's more of a give and take. How do we get this stuff done? And I think that, and I'm hopeful that actually that will be effective.
The impatience here varies each year. We'll dive into ESG here in a moment, but what I'd like to talk about now is the data check. And as we ended our broadcast yesterday, it was simple. The markets were in disrepair, and the markets come back better today. There's no question about that. A little bit of an ebb in the last hour or so. Futures negative 17, and the yield I've given up. I guess I got a 30-year bond under 3% with a 10-year 2.73%. And to me, the key thing with Will Kennedy was a 115 print on Brent an hour ago.
There's been a shift in the narrative, though, when it comes to bonds and what we're seeing there, which basically is, you know, we are moving into a growth slowdown, and how much does that feature into the investment thesis? And so you are seeing a change in how people are kind of strategizing. We heard that from Chris Harvey earlier of Wells Fargo.
This is a joy right now, and it is a joy because you know the visibility of someone like Ray Dalio, and of course we gazed yesterday on the Dalio goat farm with Bob Prince. There's Rebecca Patterson, now there's a Bridgewater. They've got a full force complement this year. But beneath the names you know are really first order people. One is Richard Falkenrath, who was with us years ago, expert on Russia and security, and folded into that is sustainable investing. Karen Carney-Oak-Tambor is Chief Investment Officer, I should say co-CIO of Sustainable Investing at Bridgewater Associates. Are you and Falkenrath on speaking terms?
Love Richard. He's such a great guy.
How do you fold in your analysis, the geopolitics of what everyone wants is some better outcome in climate, with his dead serious analysis of geosecurity?
I think that what is happening now is that there's sort of a tough realization that to make progress on climate, a lot of the levers that we've put out there as the most effective levers are actually pretty inflationary, and that's more difficult to do at a time when inflation is already rising. And at the same time, we can't really think about energy without also thinking about energy security. So now we've gone from sort of a one-dimensional equation, bring carbon down, to a three-dimensional equation. Do it acceptably given inflation and handle energy security at the same time.
This is a critical question, and particularly I mentioned Newcastle coal only because if I don't mention Australia every 15 minutes, I can't be on air. But coal is, you can't even do a standard deviation analysis on Australian coal. It's such a moonshot right now. Are you amending the Bridgewater ESG view, or are you pausing it, waiting for a place to restart the present ESG view?
You know, for us, there's two types of, quote, ESG views. One is just, you can't really analyze any markets anymore without thinking about environmental, social, and governance issues. It's almost silly and outdated to think that you could really imagine what's going on in the world without talking about what are people going to do about climate change? Is governance going to work for us? What's going to happen with inequality? These are just critical issues. And then there's a different call, which is people increasingly coming to us and saying, you know, I don't just care about risk and return. I do want to think about the impact my money's having. And coal's a great example, because you might do great financial analysis and say, maybe I can make a lot of money actually investing in coal, and get the answer back of, actually, I want my money to be supporting the transition. I don't want my money benefiting off of that. So that's really a paradigm shift in our view and what we're seeing in global investors.
There's also been a lot of discussion about greenwashing this year, and Elon Musk's comments were very much in the forefront, where he basically really challenged some of the legitimacy of the ESG criteria. What's your response to that, especially given the fact that Brian Moynihan of Bank of America seemed to support what Elon Musk was saying?
I think that you need to think about splitting what's the point in time picture and what's the forward-looking picture. For point in time, we should just have good answers, right? The same way that we know if a company today is profitable, we should have good answers about whether or not companies are emitting and what they're doing today. And all these standards and SEC and everything, it's going to move us there. We're going to get to the point where we know the answer. But then forward-looking, you know, there's always been disagreement. Why do we have equity analysts? One analyst is going to tell you this product's going to work. One equity analyst can tell you this product's going to fail. That's how it should be. They should be analyzing what's happening in the future. This is no different. Investors are paid to predict the future. And if you're looking at a company and saying, how are they going to do over the next 10 years? Are they going to succeed in transitioning what they're doing? If a company's promising you, I'm going to get out of the regular vehicle business, I'm going to make all EVs. You got to decide if you trust that, and that's no different than assessing other things about the future that are uncertain.
So you were talking about the inflationary aspect of having a secure and, frankly, a greener energy system. It's not just energy, right? It's broadly across the entire ecosystem, the supply chain, and people are talking about how do you make things more sustainable. If you have to look and see if it's sustainable in China, all of a sudden you might have to pay people a lot more and do it somewhere else to do it. How much have we actually factored in the inflationary aspects of some of this shift in ESG types of investing?
Well, I think these are some of the forces, the secular forces underpinning the shift from deflation to inflation. Every investment we made abroad for 40 years was extremely, efficiency producing. You got cheaper things out of it. And now, if we want to invest because we need to turn over our energy system, by definition, we're rebuilding what we have, and we need to do that in order to get out of climate change. If we want to rebuild because we want security, so we don't want certain providers, we want others, or we just want to have resilience in the supply chain. If this one goes down, I can have these three others. That's proactive new spending that doesn't create savings the way that old ones did. So these are secular reasons why you're going to get inflationary spending.
Karen, we have at Bloomberg Akshat Rathi, who's leading our coverage on green. He writes a newsletter called Net Zero, which is read worldwide. And his religion off of his chemistry work is it's science-based. Are the corporations that Bridgewater's talking to, are they science-based, or are they almost PR and policy-based? Is there science underneath the ESG of business?
I mean, look, there's a wide range because this is all changing so fast. So I'd say 2 years ago, the average investor we talked to would sort of say, it's great, you guys are doing sustainability, but that's not part of what I do. That's totally different today. And so companies are getting really increasing pressures from their investors. They're asking tougher questions, they have better data. So what was sufficient, even 6 months or a year ago might be something glossy that doesn't mean much. It's increasingly being ratcheted up.
Can you own big oil right now? Is Dale Yo up to his eyeballs in big oil?
I would say that in a strategy where you care about the impact of your money alongside risk and return, no big oil company has yet reached that bar, but it can, because honestly, they have a lot of expertise that could really meaningfully contribute. And so we could easily see in the next, year less, a big oil company saying, this is how we're going to use our expertise.
But how much does this moment challenge the move to green, considering the fact that everyone's rushing head over heels into commodities to protect against inflation, including big oil?
I think that commodities are a very important inflation hedge, and that the idea that you wouldn't own commodities if you care about the transition is totally wrong. Do you know how much we need to get out of the ground of things that are not oil, whether it's copper, lithium, iron, you name it, in order to have a transition? There's no transition without commodities. And so this idea that to be green, there are definitely bad practices at some of the miners, but responsible investors should try to shift those practices, because there's no future without getting more of those things out. And the reality is, these are long supply-demand dynamics. It takes you years to get a copper mine up and running and actually have supply on. So for an investor that's seeing supply-demand pressures and saying, I need inflationary protection, these are great inflation protection assets.
Karen, thank you. Karen O'Tamber with us with Bridgewater Associates here on a topic some years is front and center. I'll be blunt. Distracted this year to distracted Davos.
Distracted, but to the extent that they're happening, to the extent that the conversations are happening, they're much more realistic. Is it fair for me to say that? They're much more tangible. How do we deal with the current needs of actually using fossil fuels to transition to something that looks different in the future?
But critically, that's based on price. Price is changed.
Well,
and because price has changed, the dialogue's changed.
Well, but how much are people really shifting away from saying, look, price solves all? If you let oil prices go to
we don't have
$1
that
luxury.
luxury.
Well, right, exactly, because it affects people in a different way. It was good, yeah. I mean, it's a nuanced Davos. How about that?
I like distracted Davos. They're distracted by a lot going on.
He likes alliteration.
Again, the President of the United States this afternoon on Bloomberg, and again, David Weston in Balance of Power with a difficult show at 12 noon. Coming up, a gentleman's from Cisco, an annual visit with Chuck Robbins. Stay with us, Lisa Bremwitz and Tom Keene from Davos on radio and television. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. It's the deadliest shooting in almost a decade in a school. A teenage gunman opened fire at an elementary school in Uvalde, Texas, killing at least 19 children and 2 adults. A number of others were wounded. Law enforcement later killed the 18-year-old attacker. Investigators are examining whether he made statements online alluding to the attack hours before it began. China's military has sent a warning to Taiwan and the U.S. It conducted aerial and naval exercises around the island after President Biden said the U.S. would intervene militarily to defend Taiwan in any attack from China. The Chinese military says that U.S. actions regarding Taiwan will lead to a dangerous situation. Over in the UK, Prime Minister Boris Johnson says he bears full responsibility for illegal lockdown parties in Downing Street. A long-awaited report on the scandal was released today. Johnson told Parliament he was only briefly at the parties in question and he didn't know about the bad behavior that happened later. In Georgia, Governor Brian Kemp won the Republican primary, dealing a blow to Donald Trump. Kemp defeated the former president's hand-picked choice, former U.S. Senator David Perdue. The Trump camp incessantly criticized Kemp for refusing to overturn Georgia's 2020 election results. Kemp will face Democrat Stacey Abrams in November. And Pfizer plans to sell its entire portfolio of brand-name drugs at cost in as many as 45 lower-income countries. It's one of the most ambitious drug access programs ever announced by a large pharmaceutical manufacturer. The initiative will start in 5 African countries with 23 drugs for cancer, rare illnesses, and other conditions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Last 3 months, the focus has been Ukraine. But of course, the confrontation is also between Russia and NATO. It's not just a Cold War between Russia and NATO, but there are elements of a hot war. So of course, people are rather disconcerted by that.
Ian Bremmer out with the new book, The Power of Crisis, and he is front and center here on a multiple set of crises, folding back to the United States. And I think the number one thing from Ian Bremmer, and boy, do you see it, was his focus on Europe, from Finland on down to Mr. Erdogan in Turkey.
Frankly, this is the continent that is most roiled by the Ukrainian conflict. How do you rethink energy dependency? How do you rethink a continent with a new threat, with a new imminence?
Dr. Bremmer really pushed back against some of the present zeitgeist, really focused on Putin. He made very, very clear he is not writing of a short term for Mr. Putin, that this could be lengthy and changing for the world. We welcome all of you to the World Economic Forum at Davos. We're following the markets, of course. We're following the tragedy in the United States as well. David Weston with coverage here at 12 noon. Anne-Marie Horton is at the White House. Of note in the markets today is oil at 115. It is an annual visit, but it's a very different visit as he has recovered. Chuck Robbins, Chief Executive Officer of Cisco, over what the Tar Heels did in basketball last year. How'd that go down?
Hey, I was very proud of them. Don't you think?
I think so.
Yeah. I actually went to the game in New Orleans and cheered them on, and they did a great job. They had a wonderful season.
You were there in mathematics. In mathematics, you go in your freshman year, it's calculus of 1 or 2 or 3 levels, and they talk about the first derivative and the second derivative. And I would say this to John Chambers as well. You're leading the third derivative at Cisco right now. What is your day like in trying to figure out where the stuff is coming from and where it's leaving from Cisco to your valued clients?
Yeah, well, first of all, thanks for having me. It's good to be here. Look, we have an incredible team on the supply chain side. I mean, before this crisis that we're currently facing from, in the components world, Gartner, the analyst firm, had rated our supply chain #1 in the world 2 years in a row. Now, my team thinks that was a kiss of death because the last year has been very unfortunate, but they do a great job. And so my days are really about how do I help them. And so they identify areas where I can get involved and be helpful. Had lots of CEO to CEO discussions with our suppliers, approving extra dollars to be spent to try to solve some of these problems, and it's just.
I want you to give us one vignette of one discussion. You don't need to name names, but are you talking to CEOs about delivery or manufacture or flying something from point A to point B? I think a large part of our audience doesn't understand the actual sweat that's going on in this world crisis.
Well, let me explain it this way. Our products have anywhere from 5 to 30,000 individual components. So when you get all of those parts together, we call it squaring a set, and you have to get all 30,000 to sell the product, to ship the product. And so what we do is we have lots of final assembly and test plants. So what we've been doing lately is we find ourselves with inventory in one place that we need in another place, and we got private jets flying all over the place trying to get this stuff going.
Exactly, and this is called just-in-time. This is the new just-in-time.
Yeah, exactly. Just in time, try to get the thing manufactured. How much are we just in time in terms of transforming a supply chain, and is size the key determinant? Do you have to get bigger in order to have a better supply chain?
I don't think so. I mean, it certainly helps to have scale, for sure. But I think what we've done is we've designed for efficiency and cost forever, because we never experienced this before. And we built our products for speed to market, simplicity of design. And so we built them with we'll go pick a manufacturer for a certain component, and we build around it.
Right.
The whole industry's done that.
So, but I mean, I guess I ask this because Broadcom is buying VMware. VMware at one point was thought of as a possible acquisition target for you. Would you think about offering a competing bid or possibly having a similar type of acquisition?
Well, that went sideways from supply chain in a real hurry, didn't it?
Be careful. Be careful.
And so let's talk about the component shortage. It's the reality of the supply chain situation, though, is that every company, every electronics company is having to redesign for geographic resiliency within the design of your products, redundancy, different designs, security, and I mean that's what we're going to be embarking on. Everyone's doing right now, and it's going to take another year or two.
I'm not going to let you off on VMware. I remember an esteemed CEO once saying, when we make an acquisition, we're acquiring engineers. In the new trauma, the slowdown, yes, in retail, but in the new economy that we're in, are we going to see transactions and combinations to coalesce the thing you need most, which is engineering?
So from an M&A perspective, the question that people are asking is, given the valuations, they're finally, come down. They've been extraordinary for the last couple of years. Does that change our M&A strategy? And I say, no, it doesn't change our M&A strategy, but it might change a target's willingness to discuss, to talk, right? And so I think what you have is you've got a lot of these startups that have been running for 5, 6, 7, 8, 9, 10 years. They've never seen a downturn.
Right.
Some of these young founders have never seen this before. So they're trying to get their head around, is this real? Is this like, wait, was I worth that or am I worth this? And so, we think that we're always looking. We always have a list of anywhere from 10 to 30 targets that we could be looking at any given time. And so, obviously, if we find something that they're more willing, because the challenge we've had over the last couple of years is competing with IPOs.
Yeah. Well, what you say is fascinating, and it's something that was reflected in a Wall Street Journal article about big tech actually seeing this as an incredible opportunity. And even though the shares are being beaten up of a lot of tech companies, they're using that cash to possibly make these acquisitions. Do you think it's because of the willingness of some of these startups to really be acquired that will really drive that?
I'm sure some of them are still trying to figure out if this is a new reality or not. But there are some of them that will say, wow, given the uncertainty in the world, if we're looking at our strategic options, this one may be a lot better than it was 6 months ago, when they thought that every IPO made you a billionaire. And so I think you could see more for sure. And we have a strong balance sheet. So
I was going to say, your balance sheet is exquisite. Does the financing change with the lift in interest rates here? Is the mathematics changed?
I mean, we build that in. We build that into our pricing models when we do it, and we just fluctuate the interest rates.
On that list of 30 companies, can you give us a few names?
Yeah, I'll give you. There's
Chuck Robbins.
Really? Is he
with
going to
a
do
non-news conversation. We went down in flame. You tried.
He was like, absolutely not. Yeah.
You were as rude as you were as those 5 parties last night. Chuck Robbins of Cisco with us. Thank you so much for a lack of news. We greatly
I think it's actually
my team's going to appreciate the fact that I didn't make any news.
No, but honestly, I will say.
Yes, that's true.
I think it's actually important, though, to note that the valuations have changed for the founders of some of these companies, and the idea of a changed reality for financing, making the way, paving the way for some of these acquisitions. I think that's
I wonder, getting to January Davos, I wonder what the bond adjustment's going to be like for people.
Yeah, well, who knows? I can't get out there that far. I wonder what the acquisition's going to be like, because finally, there might be some that are willing to sell.
Coming up, Mikael Damberg, the Swedish finance minister. There'll be more news than there was with Chuck Robbins. This is Bloomberg. Good morning.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
morning, everyone. Bloomberg Surveillance from the World Economic Forum in Davos. Someone that's been here, the church behind us, 13th century. Michael McKee was here in the 14th century at the meetings of the World Economic Forum. Different topics then, but still somewhat the same. And with that, we need to go to Mike. We miss you, our economics and policy correspondent with economic news in New York.
And Tom, when I was there, it was not the piano bar, it was the harpsichord bar. It was that long ago.
Very good.
Durable goods orders up 0.4. That's down from 1.1% in the month of March. Ex-transportation, 0.3%. That's down from 1.4%. Both of those slower than anticipated. The forecast for both durable goods and ex-transport was 0.6. Capital goods, non-defense, ex-air, that's the part that economists like to watch because it goes basically into GDP. That's a 0.3 gain, down from a 1.3 gain. So we're really seeing a little bit of weakness there. Shipments, which make a difference in terms of what we're looking at for this quarter. Shipments were up 0.8% for capital goods, non-defense, ex-air, which is good news in the sense that it suggests that we're going to have stronger growth this quarter. And I might also mention, guys, the mortgage applications index fell another 1.2% earlier today. That was released, and it just goes to show you the Fed is beginning to have an impact on the economy here in the United States.
Yeah. Mike, what's so important here is to summarize the emotion. There's some good news. There's a lot of bad tea leaves out there. But within all that you read, which day does that tilt right now? Which way does that tilt right now?
Well, you're tilting towards a slowing economy, and I think the problem is we get caught in between those on Wall Street who see the market going down and see that as a disaster of all time, and people on Main Street who are seeing things slow down, but they're not losing their jobs yet. And so there are things that matter to them more, inflation being one of them. And this is what's supposed to happen. The Fed's supposed to tighten, and we're supposed to see things slow down so that maybe we see inflation come down.
Well, Mike, and that's what we're doing right now is looking at the markets and sort of the feel in the markets, which is that slowdown that people are looking to. And just to sort of run you through what we're seeing after this data, following on to what we saw yesterday, also weaker than expected data across the board. We are seeing losses continue to accelerate or deepen, I should say. S&P futures down 0.5%, 39.20. The euro losing a little bit more versus the dollar. Dollar strength today, reversing yesterday's strength in the euro. And the 10-year yields, wow, going back to the lowest since March, as we take a look at a deceleration in growth and possibly inflation longer term.
Mike, what are the ramifications if we have a 5-year real yield that's becoming more negative, and also all of a sudden the 10-year real yield nicely below zero, positive 0.20%. What are the ramifications for our central bank if we return to negative real yields?
Well, let me do a bit of a promo for our coverage this afternoon of the Fed Minutes. People are going to be looking to see what the Fed thinks of that and how much they make of financial conditions tightening versus interest rates rising. Financial conditions have tightened a lot. And this morning, Jim Vogel of FHN Financial was saying that it's unusual because bonds are trading along with stocks in this situation, and he doesn't think that continue. And that's going to snap back, and rates are going to rise significantly once the market really figures out where we're going with this. Then the question becomes, is there a Fed put? And right now, it doesn't look like there's going to be because we're still 14% above the pre-pandemic high.
Mike, we also saw downward revisions on a number of different things, including durable goods. What do you make of the downward revisions?
You can't make too much of them, Lisa, because the data are incomplete when they first come in. We will get an update on this when we get the factory orders report. It contains durable goods revisions, but durable goods are one of the more variable in economic statistics. They go up and down, and it's kind of hard to tell what's going on. Interestingly enough, defense capital goods orders are up 2.5% after being down 8.6%. I was expecting one of these months we were going to see a lot more orders because we're sending so much of our stuff over to Ukraine. You'd think that they'd be ordering more to replace it.
Nice place to end with our next conversation. Michael McKee, thank you so much. And again, the Federal Reserve Minutes this afternoon. Michael McKee with true expert insight on the parsing of the word several in some in a few.
How do you feel about it, really, Tom?
How do you feel about it?
Yeah,
well, that's where I am
out some
on
and few.
the minutes.
Yeah.
I got a lovely email yesterday, as with the former Prime Minister of Finland. I tried to mention something most Americans don't know about, and that is the Winter War of, I believe it was 39, where 25,000 of Finland and so many others of Scandinavia gave their lives. This is front and center for the discussion of Finland and Sweden as they consider a new Russia. Mikael Damberg is the Swedish finance minister and joins us this morning. This morning it is front and center, your Prime Minister, Prime Minister Andersson, with these very difficult decisions for a neutral Sweden, I believe, to 1523. How abrupt is this change for Sweden, knowing the history of World War II and knowing where we're going now with Russia?
It's a huge decision for us because we've been non-aligned for 200 years. So actually we're one of the countries in the world that has been in peace for the longest time. So for us taking the decision after the Russian invasion of Ukraine to change and to see that our security is stronger within NATO than outside, it is a historic decision from our
I've never understood the politics and social humor or seriousness from the distance from Oslo to Helsinki, across, in Denmark as well, across all of Scandinavia. I'm not informed on it. How coalesced, how united is Scandinavia, Denmark, Norway, Sweden, Finland at this time of crisis?
Enormous unity, because we share borders, we share history. As you mentioned, Finland and Sweden was the same country for hundreds of years. Before Finland became their own country, they were part of Sweden. My grandfather actually died in the Winter War 1939. My mother was 4 years old when she was sent from Helsinki to Sweden as a war child.
What was Mr. Putin thinking, knowing that history? I don't understand, given everything I've read about the resiliency of the Baltic Sea and the people that surround it, frankly, including northern Germany at the time. What did he misjudge about Sweden?
I think he misjudged the situation in Ukraine. He thought that he could just go in, take Ukraine, and the brother people of Ukraine and Russia would unite in Greater Russia. I think that was a very mistake, because now they invaded a democratic country. They sent a signal, not least to Finland, with a 130 mile in English. I don't know the English word, but
now you're acting like me. Let's have
a very long border to Russia. Extremely long border.
It's a historic moment with your bid for NATO. It's also a historic moment with some of the economic backdrop that you're facing as finance minister and the inflationary inputs. I know that a lot of European countries are turning to subsidies to offset the burden, particularly for lower income. What are you working toward? What is your next plan?
First of all, Sweden is in a different position. We don't have a dependence on Russian oil or gas. We have a 100% fossil-free energy system in Sweden, but we get affected anyway because of the joint pricing system in Europe, so the prices are very high. So with this winter, we actually went in and gave support to households with very high electricity bills. And now we also have a scheme that we will lower the kind of burden on people that drives cars. Sweden is a very long country. You have to have a car to actually live your life and go to work.
How do you counter the fragmentation of a system that is unified only by how high the prices are for everyone?
No, but I think Europe has shown tremendous unity, and together with US on sanctions on Russia. So just 6 months or a year ago, people were talking in Europe, can Europe unite? Will Europe split up? Now we see a more united Europe than ever. So I think this crisis has actually brought Europe together in a tremendous way.
Swedish economics is acclaimed, the contribution of the central bank to monetary theory and thinking has been there forever. Tell us about the Swedish currency with Europe. I mean, we look at Euro Swissy, we look at Euro Hungarian forint as a mortgage proxy as well. Tell us how you treat the Swedish currency.
It's the central bank that handles the currency.
It's in Davos. No one's listening.
No, but I could go to the constitutional committee to have opinion about the central bank in Sweden, because it's under the parliament, not under the government. But they have made a decision to higher interest rate, and they have a plan for it, going a bit faster than the European Central Bank, but a bit after the American Fed. So I think there Sweden usually are, in between US and Europe.
I don't mean to interrupt, but this is too important.
Yeah.
Do you have Swedish central bank minutes like we do? We report our minutes 6 weeks after the meeting.
Yeah.
Do you read them?
Yes, and the central bank always calls me and tells me about their decision, so I understand it.
Okay, really? You're asking for justification for your
I've
not
never
reading the
can I
minutes
honestly
with
say,
the
folks,
Swedish
I've never read
finance
the Fed
minister?
minutes. I
Well,
just
we
turned
all
to
know
the
this.
key
I know.
and say what happened.
He's looking for justification from the finance minister of Sweden for not reading the minutes. You didn't get it.
Several.
I think it's fascinating. Minister, thank you so much. I will read them for you.
Minister, thank you so much.
Thank you.
A tumultuous time for the nation. I really can't say enough about this, and that's been a backdrop here in Davos this week. These decisions of Finland and Sweden, we didn't even have time today to get these incredibly delicate decisions of Sweden with Turkey.
Yeah, and exactly. How do you win over Turkey at a time when that seems to be the biggest sticking point? But just sort of the historical reference of how unique this is to actually engage with some alliance after being neutral for so many years highlights how different this moment is.
Some important study on that, of course, here in Davos, and of course look to Bloomberg UK for a lot more coverage of that as well. Coming up, with the markets in disrepair after those economic reports that we saw, Maggie Tal joins us, Global Infrastructure Chairman at Carlyle. From Davos, Lisa Abramowitz and Tom Keene on radio and TV. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Uvalde, Texas, authorities say all of those killed in an elementary school were in the same fourth grade classroom. At least 19 were killed, along with 2 adults. A number of others were wounded. The gunman was shot and killed by Border Patrol agent who rushed to the scene. President Biden demanded action to curb the violence. Gun control legislation is stalled on Capitol Hill. Ukraine's President Volodymyr Zelensky says there are no prospects for diplomacy unless Russia pulls troops back to their pre-invasion positions. He vowed that Ukraine will fight until Moscow returns all of its territories. Zelensky spoke by video link to a breakfast meeting in Davos. And Russia is one step closer to a default after the U.S. Treasury let a key sanctions waiver expire. American banks and individuals are now barred from accepting bond payments from Russia's government. That indicates the U.S. would rather force Russia into default than allow Moscow to spend its dollars to benefit American investors. And China's Premier Li Keqiang says the country is facing economic difficulties much worse than at the start of the pandemic in 2020. Li urged that efforts be taken to ensure reasonable growth in the second quarter. China is all but certain to miss its growth target by a large margin. For the first time ever, much of that is due to COVID-0, which has hammered the economy. And shares of Wendy's jumped in early trade. Billionaire Nelson Peltz's Trine Fund Management says it will explore a transaction that could include an acquisition of the fast food chain. Trine owns about 12% of Wendy's and Peltz's, the company's chairman. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Inflation is so undercutting of society and builds so much anger. So I think that dealing with inflation, but you're dealing at a time when world energy is disrupted, food, I think it's a troubled period ahead. And you're going to see social instability as a result of this in countries.
An annual visit with a wonderful Daniel Yergin of S&P Global. Of course, the new map is his latest effort. But more than any year that I've spoken to Dr. Yergin, this was a year to speak of the commanding heights and the challenges we have. I thought it was just wonderful to talk to him about the shifts, and as he mentioned, the shifts in Europe are profound.
How different it is to have an entire shift away from one of the world's powers at one point, Russia, being basically excised from the entire fossil fuel system.
And we got a little bit of a quote. He didn't give us a single point estimate on oil, but I think I heard the Yergin nudge up as well. Right now, and this is an important conversation for markets, is something that is in Davos, but I think in a really clumsy way. In Davos, painted on every hotel, on every wall, on every storefront, is a nation or a company bragging about infrastructure. We're going to build this, we're going to build that. Infrastructure is misunderstood. Infrastructure is something it's easy to talk about, and it's much harder to do. At Carlisle, doing it is a gentleman from Quebec Hydro of years ago in Montreal. Macky Tall joins us now, Global Infrastructure Chairman of Carlisle. Thank you so much for joining us this morning. What is the biggest thing we get wrong about the ginormous infrastructure projects you're looking at?
Well, I think the reason why you see that everywhere in Davos is for a good reason. The world is in dire need of infrastructure. For decades, there has been underinvestment across the sector in infrastructure need. if you look at civil infrastructure, our roads, our bridges, our water systems, if you look at the energy infrastructure, if you look at other sectors, digital infrastructure, in the more recent past, the economy has been fast digitalizing across sectors. That has been accelerated by the pandemic. That creates huge investment requirement in data, in data center, in fiber into homes and the like.
What is the constraint? What is the holding up of this? If Carlyle and others are up to their eyeballs in capital, why is infrastructure delayed?
It is delayed by the needs of old infrastructure, but also new sectors. The energy transition is requiring humongous, huge quantities of investments to be able to meet that climate challenge the Earth faces. I was mentioning digital infrastructure. So I think the challenge is the sheer nature of the investment needs. I think governments are doing what they can, but the private sector and private groups like Carlyle Private Equity Groups have a role to play because we have the capital expertise and capability to also contribute to filling that gap. But it is the size of it.
How difficult is it to game out profitability of a company in transition that's sort of the sort of bedrock of a transition, particularly with energy?
Well, we take as a principle to carefully select our investment to make sure that every investment we make is profitable. We manage money for our LPs who represent, private people. So we believe that that's present everywhere, in particular in energy transition, Lisa. I mean, the investment opportunity created by the energy transition, we think, is significant. It's possibly one of the most significant in the investment space.
So can you give us a sense of tangible types of investments and the possible ROI that you're looking at?
Yes, of course. Well, in particular, let's take renewable energy, which is an area that we have been active in sectors like wind, solar, in emerging sectors like batteries, energy storage in the form of battery. You have emerging sectors, which I will get into in a second. In that case, clearly, if you have the skill set and capacity to develop these projects, to properly locate a solar project in the right location, close to a load center, close to the right interconnection, where there is a good solar resource, you're able to generate, with that capacity, robust double-digit returns as a result of that development and being able to deliver that project to customers that have an appetite for that clean power. If you invest in existing, already developed renewable projects, then you do not have that development premium. Right. And so you're investing into more operating renewable projects. In that case, you may be looking at high single-digit, low double-digit IRR, but more in the single-digit, I would say, given the lower risk-return profile.
If rates go up, does your IRR go up? Where are we in that continuum? Do you just see a longer rate, higher rate regime before IRRs adjust up?
Well, I mean, Tom, you're referring to the fact that we are in an environment where rates are increasing, where there is inflation. And what I would say, it's an important point for investors, is to face that challenging environment. There is a need for a diversified portfolio. And we believe that infrastructure contributes in a robust way to a portfolio that's going to be more resilient in that environment. The reason are that these infrastructure investments, by their nature, where you have high visibility on the revenue, often, if you take renewable project, the revenues are contracted long-term with indexation mechanism in the contracts. So I don't think you make more money out of higher interest rates, but you get a degree of protection because your revenues are indexed to that higher rate.
Please visit us in New York. I mean, there's so much to talk about here. Machitel, I've got one question. We see the miracle of LaGuardia, world's worst airport, finally, with a consortium of investors, there's optimism there.
There's optimism.
That we can refurbish and that we can rebuild. Quickly here, can Carlisle take on the Montreal Canadiens and refurbish and rebuild them? Is Canada's infrastructure project?
That would be, I'm sure, a project that, the challenge might be difficult. I would remind you that the Montreal Canadiens finished close to last or last in the league, so that might be more difficult.
Thank you. You would not invest. There's no, I'm sorry, and under Jean Bellalo, there's no internal rate of return this year on the Montreal Canadiens. He of Montreal,
Channel, I'm Jamie Maggio. A major champ moves on and a French legend bows out on day 3 in Paris. U.S. Open winner Daniil Medvedev clinched his first clay court win of the season as he took out Facundo Bagni in straight sets. The Russian was always in control against the Argentine. Up next for him, Laszlo Djere. Danielle Collins also advanced with a routine opening win over lucky loser Victoria Tomova. The American dropping just 4 games in the win to set up a meeting with compatriot Shelby Rogers in round 2. And French legend Jo-Wilfried Tsonga made an emotional farewell to tennis at his home slam after his loss to 8-seed Casper Ruud. Tsonga reached number 5 in the world and won 18 career tour titles. Don't forget Tennis Channel's daily live coverage from
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We're clearly in a bear market. The question is what's going to form the bottom.
You have extreme pessimism and oversold indicators. So what you get is a summertime bounce.
We're coming out of an environment where 2021 is probably going to prove to be a peak year in earnings.
The second round of tightening hasn't been priced in.
I think to say that at this point, global economy, that there is a recession, I think that's a bit premature.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning. This is Bloomberg Surveillance on Bloomberg Television and Radio. I'm Lisa Abramowitz. Tom Keene here. John Farrow off on assignment. We are broadcasting live from the World Economic Forum in Davos with so much uncertainty currently in the conversations, but also in markets, trying to come in with a bit of optimism today after yesterday's declines and not being able to hold on to it, Tom, as we get closer to the open.
Yeah, certainly yesterday was ugly as we were leaving the set here in Switzerland, and we've seen some improvement in the tape. I want to note that there's a few things which I'm going to call uncorrelated, and the major one is Brent crude 115. I believe that's $5 away from 120.
Yeah, we're definitely moving upward steadily as we proceed toward the summer months where the driving season is peak. We also are watching a bit of a deterioration on the S&P and NASDAQ, adding potentially to the 7 straight weeks of declines. We were hoping perhaps to hit a pause, but there is a different tone this week.
It's fragile. I mean, fragile sort of the tone, right?
Yeah, I think that fragile is the way, and lack of certainty.
Exceptionally busy morning here. We've got a lot to cover in this 9 o'clock hour Wall Street time, and we start strong with Jane Foley, head of foreign exchange strategy at Rabobank. And what is so important about Ms. Foley's work is Rabobank are truly merchants in commodities and hedging relationships for businesses. That is the heritage. Jane, tell me about what businesses are doing to hedge these crazy FX markets.
You know, I think this is a reality of an environment where the Fed is hiking interest rates and is expected to hike interest rates a lot more. You have the safety blanket, if you like, of cheap money, of liquidity taken away. And I think volatility is what you can expect as a result. Now, certainly in foreign exchange, we've seen plenty of that in the last few months. And I think the reality is over the next year or so, we're going to have plenty more volatility to come. And you were just talking about today, we've seen, you know, a little bit of a better tone today, but the tone is still extremely fragile. And to me, you know, that means that if we're looking at euro-dollar, you know, higher one day, that doesn't necessarily mean to say we've got to turn in this trend. And for me, I think in this environment, it's still something which will be supportive of dollar, this fragile environment.
I don't need the inner secrets, but for example, with an explosion in wheat prices and with the opportunity for Brazil to export wheat, just as one example, how do you advise on real to hedging customers?
Well, you know, the real is still one of the better performing currencies in the world. I think it's about number 2, number 3 in the world today, but that's not necessarily something which is going to sustain. In terms of the real, in fact, in terms of all emerging markets, you know, there are risks. There are risks from China growth. There are risks to US growth, to European growth. And what we've had, certainly in Brazil, is an environment where you've had a lot of interest rate hikes. But now for many emerging market countries, it's how much further can that go without really damaging domestic demand? And that's really difficult decisions to make for so many EM countries right now.
Yeah.
Jane, how efficient are foreign exchange markets right now, given all of the uncertainties and the crosswinds and the lack of a clear direction from central banks in terms of how to position around their moves?
It's really quite tough. I mean, I think we see that in the amount of volatility that we have. It's very uncertain. And as I say, I think that's going to be a story that's going to run through, you know, for quite a while, at least until the Fed is in a position where it can start to reduce interest rates. And that could be, you know, quite some time yet. So I think we've got a lot of different voices. I mean, we have optimism coming through on certain days. But generally speaking, if we are uncertain, if there are all these fragilities in the market, if we are talking about the risks of recession, to me, the common denominator there is safe haven. People are going to want safe haven on most of those days, and that is why I think the dollar tone is going to hold steady, despite the fact that we might be talking about slower growth in the US. I still think that safe haven is something which is going to be supportive of the US dollar.
Based on what we've heard then, even out of the ECB, Jane, are you still looking for parity with the US dollar and the euro?
Well, you know, our forecast is 103 for both a 1 month and a 3 month for euro dollar. Now, today or this morning, certainly we seem quite a long way away from that. But because we are in this more volatile environment, we've got to change our mindset to that and realize that, you know, these forecasts are going to be far more, or at least the market's going to be far more erratic, and the forecasts, you know, quite much more difficult to pin down, I think, over the next few months and maybe over the next year. And I still think that we have got a risk again that we will get to 103. And there's two parts of that. First of all, there's the dollar story. As I say, I think we have this strong dollar, this safe haven appeal for the dollar as we're looking to slower China, slower Europe. But also, if there is an oil embargo from the EU towards Russian oil, then we've got to see a far more significant chance of recession, stagflation in the Eurozone. Now, that is not Lagarde's central view right now, but it is ours. We put that into our economic forecast right now, and that means we put the embargo into our forecast, and that means we see risk of recession, and that could weigh on the euro.
You mentioned safe haven twice, Jane Foley. I'm asking for a friend, but what's your analysis of dollar Swissy? I mean, we usually talk euro Swissy because that's what the pros look at. But Jane Foley, I'm just asking for a friend. If you look at dollar Swissy, and if you were to buy 100 acres of goat farm up the valley in Davos, I mean, how do you play Swiss franc here? Are we going to see SMB cave in, and are we going to see Swiss franc strength?
I would rather the dollar. I think the dollar is the better safe haven, but I do think we could see the SMB cave in. There have been some muttering, some more hawkish remarks from the SMB over the last week or so. And really, if the ECB hikes interest rates, like everyone is anticipating they will do starting in July, it could give the SMB a little bit of cover to try and move their interest rates away from that minus 0.75%.
This is really important. Are you telling me that there's such a larger bet on weak euro that we could go the other way? And if so, what's your level?
Well, you know, once again, I think the euro will be vulnerable because I think we think there's a recession risk for the euro. That could make the Swiss franc more attractive, certainly. Bear in mind, Switzerland is far more protected from the energy security issues than most of the rest of the European neighbours there. It produces a huge amount of hydroelectricity, a lot of nuclear, for instance, so it's not as exposed to the Russian debate. It's already a safe haven. It's got a big current account surplus, for instance, and that means that if we were to see more stagflation, more recession risks in the Eurozone, I think the Swiss franc will benefit against the euro. Now, that doesn't mean to say that the Swiss franc will manage to benefit against the dollar, but we might see or at least the theme of a possible rate rise from the SMB maybe towards the tail end of this year. Certainly that conversation is one that's valid for next year.
Jane Foley of Rabobank, thank you so much. It was admirable to be talking very seriously about the Swiss franc with underneath her a banner that read something about a goat farm that you're going to buy. I've just got to say.
As I look to finance this transaction, I think where we're heading, because of Foley's brilliance, is a triple leveraged goat farm.
it's by the way, they're sheep. Joining us now to save us. We're going to look at stocks moving ahead of the opening bell. Abigail Doolittle, please bring us somewhere else.
Good morning to you, Lisa and Tom. Well, we do have futures down slightly, a little bit softer, down about 0.3%, but lots of earnings continue to roll in, and Nordstrom bucking the bearish trend that we've seen for retail. Right now, shares up 3.2%, well off the highs at one point, up more than 10%, even 20% I saw at one point. This, of course, after they beat on sales by 6%. So the high-end consumer is still there, and more importantly, they raised the outlook. Not so much, though, for Dick's Sporting Goods, plunging down about 13%. They actually beat in the last quarter, both in top and bottom line, but they slashed the outlook going forward. Relative to Intuit, the tax and accounting software company, they put up a beat. It was a stronger tax season than expected. Shares up 2.4%. Toll Brothers, the luxury home builder, up 2.7%. They beat. They're seeing softer demand going forward. Investors looking past that softer demand, that color that they're giving, of course, in line with new home sales yesterday, plunging to a pandemic low at 591,000 houses sold in the month of April. As for another stock that's popping sharply higher, the shares of Wendy's up about 9% the last time I looked. Yeah, right around there. This, of course, after Nelson Peltz's Trian Fund said that they're considering some sort of transaction there. They already own 11.8%, and analysts are supporting that. Smith & Wesson right now up 0.5%, and this, of course, in the wake of the tragedy in Texas, that mass shooting. But it is worth noting that typically after these mass shootings, we see these gun stocks rise more. Right now, relatively muted action there. Social responsibility investing could be at play there. And then Wynn Resorts and Live Nation, amid the tragedy, we don't know if it's directly linked, but sometimes we will see some of the travel trade, the reopening trade, trade down, but not off so much, down about, let's call it 0.75%. Overall, a little bit of a softer opening, Lisa.
Abigail, thank you so much. And we will be observing a moment of silence on the New York Stock Exchange in about 10 minutes here, coming up for the tragedy and the people who lost their lives in Texas, which definitely has been casting a pall. Why are we still dealing with this, Tom? I've got to say.
It is the fabric of a nation. And what is so sad about it, in talking to people who have a love of hunting or the West and firearms, we have removed ourselves so far with these repetitive idiocies. My problem with this, Lisa, is we look at these larger events and they're sad. Thoughts and prayers each and every day across this nation for the violence that we see.
And for all the children, my children included, who huddle into closets in order to prepare for a possible tragedy.
They do the rehearsals on
They
this.
do the rehearsals.
Really
Coming up, we're going to be taking that moment of silence as we try to spin forward a conversation that we shouldn't be having again. We're also going to be speaking markets as we here look toward perhaps a softer open. From New York, actually, no, from Davos. This is Bloomberg.
From New York.
Keeping you up to date with news from around the world with The First Word, I'm Ritika Gupta. More details coming out on the shooting at an elementary school in Uvalde, Texas that left 19 children and 2 adults dead. Authorities say an 18-year-old gunman barricaded himself inside a classroom and shot at anything in his way. Eventually, a Border Patrol agent raced to the school and killed the shooter. All of the victims were in the same 4th grade classroom. In the UK, Prime Minister Boris Johnson says he bears full responsibility for illegal lockdown parties in Downing Street. A long-awaited report on the scandal was released today. Johnson told Parliament he was only briefly at the parties in question and he didn't know about the bad behavior that happened later. And in Georgia, Governor Brian Kemp won the Republican primary, dealing a blow to Donald Trump. Kemp defeated the former president's hand-picked choice, former U.S. Senator David Perdue. The Trump camp incessantly criticized Kemp for refusing to overturn Georgia's 2020 election results. Kemp will face Democrat Stacey Abrams in November. Pfizer plans to sell its entire portfolio of brand-name drugs at cost in as many as 45 lower-income countries. It's one of the most ambitious drug access programs ever announced by a large pharmaceutical manufacturer. The initiative will start in 5 African countries with 23 drugs for cancer, rare illnesses, and other conditions. And Bloomberg's learned that Broadcom is working towards announcing a deal to buy cloud computing company VMware as soon as Thursday. The stock and cash acquisition would value VMware at about $140 a share. That's roughly $60 billion. The terms may still change and talks could still fall apart. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Baseline, we do not see a recession. What we're going to have is much lower growth. We are downgrading growth and simultaneously higher inflation. So the combination in terms of financial stability implications is worse than it was before the war.
Luis de Guindos, ECB Vice President, speaking in Frankfurt earlier today as we try to parse out what the correct narrative is. Are we going to see recession? Are we not? In Europe, in the U.S., and definitely the growth slowdown seems to be the predominant narrative, at least du jour. Also the predominant narrative right now, Tom, very much is around what happened in Texas for the United States.
Well, let's switch to that right now. We're coming up here in a moment of silence, folks, and of course, everyone of every political persuasion in shock over the repetitiveness of this. It's gotten old, to say the least.
Well, it's just that everyone says something needs to change. We can't see this happen again. And we were talking about this in 2012, in 2013, 14, 15. Fast forward to today, and yet another 22 children lost their lives as a result of someone gunning, just arbitrarily doing this. How do you then proceed with action?
I can only say, folks, that we will give you the best coverage we can on this with our team in Washington, of course, with Anne-Marie Horton and others. And also, I think we're working in New York to a great extent for balance of power, which you'll see at 12 noon, where, I hate to use the phrase, but they will rip up the script. And this has to be addressed once again.
It refocuses the attention once again in President Biden to speak at 4 p.m. Eastern time on the tragedy, trying to figure out how to proceed forward. It is such a difficult
The figure out forward is only the United States Senate. Whatever your belief is, that's the fulcrum point of debate.
And how to address this most? I mean, it's a multifaceted problem, and it's something that a lot of people are looking to address. But certainly a lot of investors are looking at this as well in terms of exactly what Abigail Doolittle was talking about with a certain response. But the issue really is front and center. How do you make a dent when we keep talking about it again and again?
We will have to see here. We are in Davos, Switzerland, the World Economic Forum. We saw a quiet moment in New York.
We are now going to turn our attention back to New York, joining the New York Stock Exchange and NASDAQ in observing a moment of silence.
We say good morning to you on Bloomberg Radio and Bloomberg Television from Davos, Switzerland. It is the Switzerland where I can tell you it was the lead of all of the German news agencies and all of continental Europe, their lead story this morning on the United States. For those of you on radio, the NASDAQ with an imagery of the state of Texas on their wall.
Yeah, definitely been a morning of somber thoughts for what happened and how to proceed there. It has been a unique Davos in so many ways, peppered by crisis after crisis. This just adding to a feeling of another sense of the unknown becoming the immediacy.
Yeah, well, there we are, and it will continue forward. And unfortunately, I'll let the Senate of the United States try to figure out what to do about this. I'm sure the president addressing that this afternoon, our Anne-Marie Horton will be there along with our entire Washington team. And again, I really counsel to look for balance of power at 12 noon today across Bloomberg Radio and Bloomberg Television. We will attempt to migrate to what matters. And with Scott Meinert, who has been of such support to us in our coverage of the Federal Reserve as Chief Investment Officer of Guggenheim, we are going to digress because we are 3 days in here and we have yet to mention the collapse of Bitcoin and the rest of crypto. This is a side topic for Mr. Meinert. It's certainly not his wheelhouse, but you've been focused on it. When you talk about crypto, what does everyone else at Guggenheim think? Do they lean forward and hang on every word?
Well, yes, because I'm probably the only person who spends enough time looking at it.
Yeah.
I mean, it's you know, Tom, I was an early believer in crypto. I remember looking into Bitcoin first when it was at $100. I did a presentation up at the Nantucket Project on crypto, you know, how to deal with it, how to invest in it. And I really thought that, you know, this is a viable investment vehicle. But one of my big concerns is that no one has cracked the paradigm in crypto. And when I say they cracked the paradigm, its use as a currency, right? As you know, the definition of a currency is that it's a medium of exchange, it's a store of value, it's a unit of account.
Not the last 90 days.
Not at all. And so we've learned that none of this stuff, stable coins, the whole bit, everything is suspect.
You're a really, really bright guy. I want you to explain the divide between Alan Auer at the Bank of International Settlements, who owns a high ground with Ken Rogoff at Harvard, on the study of Bitcoin and the entire scarcity, the derived scarcity of it, with the community of Bitcoin that just seems miles apart, and they won't read Alan Auer.
Right. No, well, I think, look, because Bitcoin and any cryptocurrency at this point has not really established itself as a credible institutional investment. Right, it's really become the market of a bunch of yahoos and backwaters, and I know I'm already going to be plastered on Twitter now for what I just said.
Good luck when you get back to your desk.
Yeah, exactly.
Lisa's cell phone just melted down over there.
Exactly. But you know, when you consider we have 19,000 digital currencies or cryptos or whatever we want to call them today. Most of them are junk. They don't make any sense whatsoever.
Do you have any crypto asset investments?
We did. We had Bitcoin. We bought it around 20,000. We sold it at 40,000. And I really thought we were going to correct. You know, after we got to 60, I thought we would correct to 30. We got there. And then I began to look at it and say, why are we stopping here? And so my latest work, which is entirely technical because there's nothing else to look at here, is that we were probably going to hit $8,000 before.
What was that number?
8,000 until we totally flush
so you
out
have
what's
no
going
more
on.
Holdings?
No.
Okay,
I mean, if I were, I'd be short. But
well, going
that'll
forward,
get me shot too. So
you've been predictably bearish for a while, talking about how you do think that the U.S. is heading toward recession, but you've remained sanguine on certain risk assets amid this because of the short term. Has that changed as people bring forward the slowing growth narrative?
Yeah, it definitely, it isn't the slowing growth narrative that caused me to change. It was my time at Stanford a few weeks ago at the Hoover Central Bank Conference. And I saw current Fed officials, ex-Fed officials, and they uniformly were extremely hawkish. I engaged in opportunities to talk about the market and the functioning of the market and so on and so forth. The bottom line is that
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Than previously expected because of the slowdown. And I've got to say, how much of this has to do, Tom, with what's going on in China, given the fact that they think that there will be a continued type of pullback there.
On radio at 9 o'clock hour, are they clapping for John Farrow? Is that what that's about? They do that every day at 9:30?
That's exactly what they do. They clap for him. And he's, they basically are clapping as we open into a little bit of softness. We want to take a look at the specific stocks that are moving. Abigail Doolittle in New York, what's going on?
Well, when we really break down the weakness that we're seeing, this little bit of a softness on the open, it has everything to do with big tech, Lisa. Take a look at Apple, down 1.1%. However, Apple is holding key support. The 100-week moving average has held very well in recent routes over the last, let's call it 5 to 10 years. So right now, that's support holding for Apple. And in a way, the market, given its huge market weighting to each of the indexes. Amazon down slightly. This stock close to going back below its $1 trillion market cap mark, but not this morning. NVIDIA trying to flip higher. They, of course, this chip maker, giant chip maker, reports tonight after the bell. There are some high expectations there. And then Applied Materials down slightly. So we're actually seeing a dissipation of the weakness for tech. Let's see whether or not that can turn the markets around. But Apple still down significantly, down about 0.75%. As for earnings movers, let's take a look at what's happening there, because we have a mixed picture. Dick's down 9.8%. This, of course, after they beat in the last quarter, both top and bottom line estimates, but relative to the outlook, they slashed it significantly, so those shares lower. Toll Brothers up about 0.6%. The luxury home builder did beat for their fiscal third quarter. However, they are seeing second quarter. However, they're seeing demand weakening going ahead, very consistent with that new home sales number yesterday, missing the mark for the month of April. And then Wendy's up 7.5%. This, of course, is Nelson Peltz's Tryon Management Fund is considering a transaction of some sorts. Currently, they own 11.8%. The street's pretty positive on something happening there. You can see the shares being rewarded, again, up 7.7%, Lisa.
Abigail, thank you so much. Meanwhile, Twitter kicking off its annual meeting later today. Bloomberg's Ed Ludlow joining us now for more. Ed, what are you looking for today? How volatile will this meeting be amid the backdrop of Elon Musk?
Yeah, volatile. I mean, Elon Musk's bid to buy the company is not on the official agenda, but I think it'd be an understatement to say it's the elephant in the room. We had Jason Goldman, who was an early Twitter employee, an early vice president of product on BTech last night, and he was saying he expects this to be the Ragnarok of annual meetings, of course, a reference to Norse mythology and the end of the world. And his point is that if you're a Twitter shareholder, the $54.20 per share bid that Elon Musk has put in is an absolute premium to where the shares are trading right now. Of course, Twitter's been caught up in the market volatility. It held off for some time compared to the rest of the technology sector, but also the recent sell-off in social media stocks induced by Snap's revision of its forecast. Advertising is a macro story, and I wonder if it's a point of discussion out there in Davos as well. So those will be the questions beyond the official agenda. There is a Q&A session where Parag Agrawal, the CEO, Ned Siegel, the CFO, will field questions from shareholders, but let's be under no illusions. They'll want to know what's going on with this Musk bid. Musk says it's on hold, but ultimately the terms of this deal have not changed.
Ed Ludlow, thank you so much. Greatly appreciate that. And we make jokes about it, but this is really some drama, some theater here. And I guess the modern transaction in combinations, Lisa, just an absolutely honestly original moment.
The shares at $36 and change tell you everything you need to know for a far stretch from the 54.20 that Elon Musk was proposing.
This has been a day of recalibration for us. We have guests here in Davos. We're speaking of the fractured international relations. That is a theme here of a more somber Davos perhaps than normal. But also we want to pay attention to the rate and dynamics of the markets. Michael Schumacher is head of rates and macro strategy at Wells Fargo and joins us this morning. Michael, I know on a Wednesday you're already framing up the writing for a weekend. When you look at bonds, I think far more in equities, there's a guessing of the bottom.
Scott Miner was right on. Central bankers, the Fed in particular, they care about inflation. So when we start hearing from the Fed, when we start hearing from the ECB, the Bank of England, that inflation seems maybe not under control, but a lot less nasty, that's when we start thinking about the bond market reaching a peak in yields. Until then, I think it's game on. Yields go up, front end trades poorly, curves flatten. It's a lot of messiness, a lot of volatility, but it's really that sort of thing we're focused on.
Okay, so there's volatility, and I'm going to call that a level move or maybe even a first derivative move. The fancy word you guys use is convexity. Are we at any point of instability where if that narrative continues, we move to an acceleration or a jump condition in price?
Yeah, convexity comes about in a couple different ways, Tom. So if you think about how the world functioned, let's say prior to the financial crisis, there was a lot of convexity in the bond market from hedging, mainly mortgage portfolios, Fannie Mae and Freddie Mac. That's not really there anymore. Now I'd say the convexity comes in a different sense. It's not so much market driven, it's more policy driven. So focus on inflation dynamics. Central bankers are going to be very keen to look at the path. They know inflation's coming down. Is it coming down fast enough? Is that second derivative in their favor? And that's where the convexity really kicks in today.
Mike, how much comfort do you glean from the fact that bonds and stocks have reverted back to their more normal relationship, an inverse relationship? Does that give you comfort and confidence to start making a more concrete call on risk assets?
Yeah, it does a bit, Lisa, and it was really disquieting, I'd say, to really say the least, when you think about bonds and equities having really odd correlations. So having a bit more normalcy in the world, yeah, that makes us feel somewhat better about it. But when you consider some of the broader dynamics, you could still have a world, let's say in a few months, where the Fed is not satisfied with the evolution of inflation, other central banks are not. And the central bankers say, look, we're just going to keep hiking until this thing's under control. And that's when everything sells off. So that's when you get a really bad result of bonds doing poorly and equities doing poorly. So I think in a sense, this normal correlation, if you will, it's a bit of the lull before the storm, the eye of the hurricane.
Mike, how unprepared are markets right now for the runoff of the balance sheet, which has yet to begin, even though people say they're pricing it in? The balance sheet's staying right around $9 trillion still for the Federal Reserve.
Yeah, it's a huge wild card, Lisa. You think about what I would call the big trade of the last dozen years. When central banks add to the balance sheet, when there's more quantitative easing, you buy equities. It's been that simple. So now you've got the Fed and other central banks
talking about and soon reducing balance sheets. I'm a pretty simple guy, but it strikes me that that should be negative for risk. And the thing is, we don't have a great way to calibrate just how negative it is. So in my view, at least, to my colleagues, a lot of them at Wells Fargo would agree, that should be a negative thing for risk markets, probably negative for long-term bonds as well.
Mike Schumacher of Wells Fargo, thank you so much for being with us and for that perspective. Earlier this morning, Bloomberg's Francine Lacroix spoke with Saudi Aramco's Chief Executive Officer, Amin Nasser, a really important conversation at a time of so many questions and the importance of the fossil fuel industry. Take a listen to what he had to say.
I think always price is a function of demand-supply fundamentals always. So prices will always react to supply and demand.
And at this point, we have equilibrium,
Today,
very fragile equilibrium?
No, I think if you think about today, there is an equilibrium. Basically, the market is balanced. If you ask me about demand and supply, it's balanced today. But I think there is a lot of talk about, availability or how much is spare capacity and all of that. And I think that is an issue.
How much more can demand grow from here as we restart to open up?
I think we were really caught after the pandemic, as economies start to recover. We've seen a strong pickup in demand, to be honest. And a lot were surprised to see that much demand pick up after COVID, as economies start to open and people start to, and we are seeing now in certain different countries, different enclaves, different demand patterns. But for example, in the US, you see more pickup on transport fuels. Some areas where there is some lockdowns or whatever, there is still an impact in terms of their demand. But in general, the market is well supplied.
Could you see or foresee a situation where there's so much demand that actually there's just not enough supply and the price of oil shoots up to 150?
Well, I don't want to talk about prices, but today we don't have a lot of spare capacity. Spare capacity is 2% or lower. In a market of 100 million barrels, that is very low spare capacity. Usually spare capacity give a comfort to the market that in case of any type of disruptions, interruptions anywhere in the world, that spare capacity will kick in and will supply the market. Right now it is going down, and it's quickly as OPEC and OPEC Plus releasing 400,000 every month. So very soon you have a world that 100 million barrels or more with basically no spare capacity.
So does that make you nervous, not having that buffer, that prices shoot up uncontrollably and that hurts demand?
It's always good to ensure that there is enough spare capacity in the market to supply or to mitigate any interruption that might happen. We've seen a lot of interruptions that's happening in different parts of the world, and that spare capacity will always help. Right now, I have been talking about for a long time, lack of investment is really not bringing additional supplies to the market, and there's not much investment going on.
So what's the solution for that? Because even if we start investing now, because of the crisis in Ukraine, the timeline is going to not match when we need possible extra supply.
You are absolutely correct. We have been, since 2014, we're spending approximately $700 billion. We went down to almost $300 billion. We picked up a little bit to close to $400 billion in terms of investment. But that is not enough, especially with the increase in commodity prices. So you need more in order to even maintain your current supply in the market. It will take years to build any project. We announced our increase in capacity by 1 million barrels in 2020, and it will come to the market in 2027. So it takes time to do engineering, and it takes time to bring that capacity to the market.
Does it mean that we could see a lot of volatility in prices from now until then?
There is need, as I said, for more investment. There is short-term investment that can happen. Shale oil can come to the market much quicker, but it is short cycle. But you need both. You need also an investment, a long-term project with more sustained plateau for 20 and 30 years. And that's not happening that much. We are doing our part in terms of investment, but you need that to happen from all players, all energy companies globally.
Has our relationship with fossil fuels changed because of the war in Ukraine?
No, I think relationship, we always will need all fossil hydrocarbons in general as part of the energy mix over the long term. That's our position. While we are building a lot of renewable projects and hydrogen and other projects and nuclear maybe in the future, you need in parallel to ensure that you are investing in hydrocarbons because you need both. Hydrocarbon will always be part of the energy mix over the longer term, and we need that investment. We are seeing right now a lot of talk about no investment in hydrocarbons, but this talk about no investment while we're not doing much about investment on the other side. So we need the investment to go in parallel while we're building a renewable, hydrogen, nuclear, if we are doing any nuclear projects. At the same time, we need in parallel to invest in oil and gas and bring additional barrels and BTUs to the market to make sure it is balanced.
But we used to talk about peak oil, right? Does that get pushed back?
I don't believe we are at peak oil yet because we are seeing, as I said, everybody talked about we peaked. Yeah. We've seen, we were caught in a surprise when COVID ended that we are seeing more demand. Our view that there will be more demand going forward for hydrocarbon, and that's why we are asking for more investment there.
Talking about your trading unit, will you IPO it?
I think we're always looking at our portfolio. We have done 2 infrastructure deals, a gas line deal and a crude oil deal, pipeline also. We will evaluate and review our portfolio and optimize it, and if there is anything that we intend to do, we will make sure we inform people in due course.
Do you already have an idea of the valuation of the unit, or is it too premature to talk about how much it's worth?
No, I don't. As I said, we are continuously reviewing our portfolio, and it has a lot of elements in it in terms of what we plan to do. And the minute we decide to do something of that nature, we will inform the market accordingly.
How will the trading unit actually change in terms of being able, for example, to trade some non-Saudi oil?
Well, I don't want it as if trading is now going to, as I said, trading is 100% Aramco. When we decide to, if there is a decision to do anything with TradeCo, call it TradeCo, we will inform the market and we'll inform the media accordingly. But right now, this is a lot of talk about TradeCo going into the listing. We will evaluate if there is any, as I said, the whole portfolio of Saudi Aramco is being evaluated, and we will decide accordingly.
So there could be other asset sales?
We, as I said, it's a huge portfolio that we own, and we will we put a business line, honestly, managing that. They are looking, they are reviewing, they are working hard and looking at everything in Aramco. And if there is anything that, as I said, to come to the market, we will inform the market accordingly.
A delicate interview with Ahmed Nasser. He is Aramco's CEO. That was Francine Lacroix here in Davos. Of course, important for global Wall Street, and particularly with discussions. I don't know what Anne-Marie Horton has exactly said about President Biden possibly really re-engaging with Saudi Arabia, which means re-engaging with Aramco.
Exactly, at a time when oil concerns are very much in the forefront, especially heading into the midterm elections.
Some of that oil, of course, is moving across the Indian Ocean. I believe it wanders by Singapore and turns left up the Pacific Rim to so much of the booming Asia. Now, without question, my most important interview of this Davos on Asia, the focal point of the South China Sea. Kishore Mahbubani joins us to say that he's Distinguished Fellow of the Asia Research Institute at the National University of Singapore. Barely describes his contribution to the highest compliment I can give him. Even the people that disagree with him read his books to try to understand the swirl of Asia. Mr. Mahbubani, thank you so much for joining Bloomberg today.
My pleasure.
Has China won? What a provocative book a number of years ago. Give us the update we need. Has China won?
Well, I think clearly 2022 is a bad year for China. And partly because they're struggling to get out of COVID-19, that's a domestic storm they have to deal with. And then geopolitically, of course, China has also suffered from the Russian invasion of Ukraine on several counts. Just a few examples. Number one, as I said, China wanted stability in 2022 because they're having a major political conference later this year. Instead, they get instability. Their number one strategic partner, Russia, has been weakened. They wanted to deal with the United States and Europe separately. Now there's been a consolidation of the West, which is obviously a negative for China. And fourthly, of course, they didn't expect that the Russian central bank reserves could be taken away so easily by the West. And China, as you know, the Russians only have $700 billion, but the Chinese have $3.2 trillion of assets. And these assets can now become liability. So 2022, therefore, is a bad year. But I think the Chinese have also shown a capacity to manage crisis very well. So I would say same time next year, when you come back, things will probably be better for China, and the long-term trajectory will continue.
After lockdown, and I'm thinking of Robert T. Kaplan's wonderful Asia's Cauldron, of the tour around your South China Sea, including your Singapore. After the lockdown, China feels they own a huge part of that body of water. How does Asia's Cauldron respond to China, and particularly after the election of Marcos Jr. in Philippines?
Well, the good news I can give you is that even though the Chinese have drawn a 9-dashed line, which seems to imply that they're claiming ownership of the South China Sea, I can categorically say that they do not claim ownership of the South China Sea. And they actually allow total freedom of navigation through those waters. And China doesn't regard those waters as internal waters.
How badly does Singapore and the other nations of the Pacific Rim need the United States to show the flag with a dynamic Navy and also with a reinvigorated base structure across the Pacific Rim?
Well, as you know, the reason why East Asia is the most successful and most dynamic economic region in the world is because the United States has had, I'm talking about 50, 60 years, a consistent commitment to keeping that region stable and secure and allowing growth and prosperity. And ASEAN, the Southeast Asia, 10 Southeast Asian nations, have done very well, primarily also because of the American presence. I can just give you one statistic.
Please.
In the year 2000, Japan's economy was 8 times the size of ASEAN. Now it's only 1.5 times larger. By 2030, ASEAN will be bigger than Japan.
See, his hands move up and down, just like on radio.
Exactly.
It's great. Great radio with Kishore Mahbubani.
You're getting an endorsement right there. No, there is a really very real question underpinning what you've just discussed, which is the rise of China, maybe paused by the pandemic. It's been a very bad year. How far have they pushed out their overtaking the U.S. in terms of size of their economy?
Well, I mean, the Chinese economy has literally exploded. Let me give you another statistic. In 2012, 10 years ago, China's GNP was $8.5 trillion. 2022, it's $18 trillion. No country in human history has added $10 trillion to its economy in 1 decade. So the long-term growth trajectory of China, this in 2022 will slow down, no doubt whatsoever, but it will bounce back up because the Chinese have made massive investments, in their economy.
Do you think that people here at Davos, the representatives, fully understand this at a time when China is not represented and the main focus has really been on Ukraine and Russia?
Well, as you know, Davos is like an onion. What you see in the open sessions and public sessions is what they're talking about publicly. But equally important, at the core of the onion of Davos, there are hundreds of private conversations, private dinners, private encounters. And as someone who wrote a book called Has China Won, I can assure you that there's a lot of interest in China and what it means. I mean, people know intuitively that within 10 to 15 years, China will have the largest economy in the world. And the world will be very different.
So how are people positioning for that in those private conversations inside the onion?
Well, I think what's happening is that there seems to be a bifurcation between the Western approaches and the rest of the world. And by the way, out of the world's population, 12% live in the West, 88% live outside the West. And most of the 88% in Latin America, and just give you quickly one statistic. 10 years ago, it took Brazil like 1 year to export $1 billion to China. Now it takes 72 hours. Okay. So you see the dramatic changes? So the rest of the world understands that they have to adapt and adjust to a new China. And the more we can engage China multilaterally, and this is what we hope the United States will do, in a sense, enmesh China in various multilateral arrangements, which will then, frankly, constrain China. Do they want to be enmeshed? I think as of now, while they are still number two, I think they're the Chinese, in the Chinese psyche, after 4,000 years of Chinese civilization, what they fear most is chaos. There's a Chinese word for it, luan. And if rules give stability, they'll accept the rules.
We're running out of time, and this is so important, because I can't say enough about it. Do we need a dose in America of Kissingerian realpolitik? I mean, what do you need from America to change the dialogue where the fact is the legislature of the United States does not want to engage with China? So what's the realpolitik that we need to begin to look post-World War II, post-Vietnam, at a new Pacific Rim?
You're absolutely right. In fact, the central insight of my book, Has China Won, is based on a lunch conversation I had one-on-one with Henry Kissinger, where he said that what the United States really needs is a comprehensive long-term strategy for managing the rise of China to match the comprehensive long-term strategy that China has to manage its relationship with the United States. So it is Henry Kissinger who gave me the central insight for my book.
Kishore Mahbubani, thank you so much for taking the time of the National University of Singapore. Tremendous insight on a day when there has been so much focus on Ukraine and Russia in the public sphere, but under the surface.
You've been leading on this.
I mean, honestly, under the surface.
It is a European Davos, and as we heard from Mr. Mahbubani and Lisa, you've said, the radar's still on Asia here, even within all this turmoil.
Especially as Chairman Lee today came out and basically said, look, this is going to be worse than what we saw in March of 2020, February of 2020. This is something that is much more significant economically for China. Right now, we are seeing a little bit of a bounce in markets. Coming up on Balance of Power on Bloomberg Television and Radio, Robert Zoellick, former president of the World Bank, to spin the conversation forward. And of course, many discussions about what happened in Texas with one of the worst mass shootings in a school in United States history. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, There were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benagold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not 0, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We we need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers. One of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes. I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is the social media platform for finance. Places like Wall Street Bets is where it all goes down.
started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions want them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home, but in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African-American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana,